Hey everybody, it's Paula here and welcome to this week's Zoom Out Crypto Show. In this week's weekly and monthly analysis of the Ethereum chart, we're going to take a look at how the market might respond in the next couple of weeks. So let's hop over now to the chart and take a look. So this is the Ethereum chart. And it is the weekly chart that we're looking at, and we can see quite clearly that we're currently in a downtrend. I have three different trend lines drawn on this chart at the moment, and each of these trend lines is extremely strong. They all have between about 7 and 9 touch points each, so each one is quite strong. This dark red one here is stretching right from the very top when we reach the all-time high. And we can see we're nearly touching it right now. So last week, we ended the week with a red candle, but there wasn't much action in that candle at all. We can see it's quite a small candle. In fact, it's almost a spinning top candle, which indicates the reversal of a trend. Now, we had this high volatile candle here, and then these small volatile candles here. So this trend reversal could be just for this small reaction here, and we could still go down. What will be interesting to see is, are we going to make lower lows, or are we actually going to make higher lows? Now, if we make higher lows, what's going to happen? Well, first of all, we need to break through this trend line. And this is a long-term trend line, as I said, reaching all the way back to the peak, the all-time high. So if we can break through this, that would be a great signal. But this short-term trend line here that I've also drawn, this really light red one, is a short-term one going back to May of this year. And this is the current pattern that we're in that we need to break out of. So if we can break out above this trend line here, that would be a really good positive indication. The next trend line that we have, though, is this green one up here. And this one, again, is a very strong one with about 8 touch points, also going back to the all-time highs. So this would be the next point that I'd be looking to break if we were to make a move to the upside. Now, just because we have trend lines aren't the be all and end all of it. Trend lines can easily be broken, and quite often they don't hold. So what else am I looking at in this chart? Well, I'm looking at the volume. The volume here is really, really low. Now let's just tighten this chart up for a minute, and we can see the spike in volume here. We can see a spike in volume here and here and here. So what's actually happening here? So this spike in volume here, we can see if we just go back a little bit further, we can see the volume as the downtrend is, the volume is going down. But as people start to think we reach the bottom, we see this uptick in volume. And this is the smart money buying back in. Now, a lot of the smart money started to leave around here, and we can see the volume. It's from here that the volume starts to tether off, bar this peak in May. So the volume started to tether off in December, January 21. We're going into January 23. So this is 2 years later since the peak of the volume. And we don't see an increase in volume, which would suggest that the market is still really fearful that we haven't reached a bottom, and that the smart money hasn't yet started to really reaccumulate and buy back in. Let's have a look at this now on the monthly candle. Because when you see a trend forming on a monthly candle, it's even more solid than a trend that has been forming on a weekly candle. That's why we do these zoom out shows, because we can see momentum and swings in momentum a lot easier than when you're zoomed in to the 1 minute, the 2 minute, the 5 minute charts. This way we can see the bigger picture. So again, the trend lines are, they still hold, and we will be waiting for the December candle to actually close. So the November candle closed, and it really did engulf the body of the candle for October. And an engulfing candle like that is the sign of a a reversal to the downside because it is a down candle. But again, you can see the volume where the smart money was buying and was selling. So let's just zoom back, and I'm going to make it into perspective here by going back to the 2018 bull run. And we can see that when we reached the bottom, the volume really picked up as it had dropped during the bear months. So what I'm looking out for now is an increase in volume. Now, there is some things to consider when talking about the volume, and that the volume of the entire market cap, the dominance has changed quite a lot. And at the moment, I think Ethereum is standing around about 18% dominance. But back here, Ethereum would have been on a lot higher dominance because there was less tokens. And so more of the money flow obviously was available for Ethereum that isn't available at the moment for Ethereum because it would go into other coins. So that is the Zoom Out Crypto Show for this week, and we looked at the Ethereum chart. I do hope that you enjoyed this video. If you did, give it a big thumbs up, and don't forget to subscribe to my channel so you don't miss any more of my videos. I'd love to hear your thoughts. Please do put them in the comments below, but beware of scammers and impersonators in the comments. Next week, what we're going to look at is the total tree chart. The total tree chart is the total market, the total cryptocurrency market minus Bitcoin and Ethereum. So it's all of the alts bar the top two alts. And this is an extremely important chart to be looking at to gauge how the overall alt market is doing in this bear market. So I look forward to seeing you all next week. Goodbye now.